Respected viewers, dear family of dreamers, there's a saying, the road to riches is not crowded. It's a path less traveled by the masses because it requires something that most are unwilling to practice as patience, discipline, and above all, the courage to go against the grain. It's not easy to walk a path where others might call you foolish, misguided, or too conservative. But if you dare to listen to the voice that says, wait, don't follow the herd, you may just stumble upon one of life's greatest truths. We live in a world where everyone is seeking the shortcut to success, the quick fix, the next big thing. But what if I told you that true wealth doesn't lie in fast decisions or impulsive actions? What if I told you that it lies in the uncommon common sensey that the masses ignore? What if I told you that the greatest lessons in financial success have already been written down by those who dared to think differently, by those who chose to see opportunities where others saw risks? And what if I told you that the very principles which have made the world's wealthiest people so successful are as counterintuitive, even to the point of being unpopular? This is where the power of contrarian thinking lies in simplicity. You see, the wealthy don't buy into the excitement of the moment. They don't invest in the hottest trend, the latest craze. No, they think deeply, carefully, and often slowly. And as Munger's uncommon common sensey is the map you've been searching for, the key that unlocks a simpler, better way of navigating the complex world of money, business, and investing. 2. Let's start with one of the core principles that he believes is at the very foundation of financial success of theirs. The best way to get rich is not by being smarter than everyone else, but by being wiser in your decisions. 6. Imagine this: you're standing at a crossroads. The world is telling you to race forward, that there's only one way to achieve success: hustle, grind, jump on every opportunity that comes your way. But something inside you says, slow down. Think this through. Make the best decision, not the fastest one. Most people will choose the fast way. It feels right, it looks right, and it promises instant gratification. But in reality, the best decisions are often the slow decisions. The decisions where you take a step back, evaluate the risks, and then wait for the right opportunity to emerge. This is the mindset that separates the wealthy from the struggling. It's the difference between chasing the shiny object and waiting patiently for the one that works for you. It's about having the courage to say no, not to everything, but to the distractions that constantly knock at your door. Take, for example, Warren Buffett, who has been a close partner to the speaker. Buffett's strategy isn't about timing the market or making quick decisions. It's about buying businesses that he understands, that are undervalued, and that will continue to grow in the long term. While the market is obsessed with chasing the next big thing, Buffett sits back, analyzes, and waits for the right opportunities. And this is exactly how this wealthy think. But don't mistake his patience for inaction. It's not the same thing. Patience is about waiting for the right moment, knowing that true wealth doesn't come from rushing or hurrying. It comes from trusting the process, from making thoughtful decisions, and from learning to say no when everything around you screams ways. It is this CS patience that brings us to another crucial point of Munger's advice. Avoiding unnecessary risk is often more important than seeking rewards. Too many people chase risk in hopes of gaining large rewards, but often end up with nothing but losses. The difference between successful investors and those who fall into the trap of speculation is the ability to recognize unnecessary risks and then avoid them at all costs. In today's world, we're constantly bombarded with the idea of taking risks, whether it's the next big cryptocurrency, a speculative stock, or the latest startup that promises exponential returns. But what's missing in the hustle for these opportunities is the concept of Deere's safety and his consistency. Remember, it's not about taking risks, it's about taking smart risks. It's about understanding what you're getting into and ensuring that you have a margin of safety before committing your hard-earned money. As patience, wisdom, and avoiding unnecessary risk. This is how the wealthiest people operate, and it's exactly what Munger's uncommon common sense teaches us. Now, I know it's not easy. The world around us encourages quick decisions, fast returns, and the feeling of urgency. But I promise you, by embracing these counterintuitive truths, you will begin to unlock the power of consistent, long-term wealth. As we move forward, remember this: your wealth is not determined by how quickly you make money, but by how wisely you manage it over time. So, dear listeners, let's pause and think. Are you ready to take a step back, evaluate the risks, and make your next financial decision with a calm, patient, and contrarian mindset? Because a true wealth lies in seeing what others can't and waiting for the right moment to act. Let us continue our journey with a simple yet profound idea. Simplicity is the ultimate sophistication, and many of us are drawn to complexity because it appears smarter, more sophisticated, and more exciting. But the truth is, complexity is often the greatest enemy of long-term wealth. The richest minds in the world, those who've managed to build wealth over decades, have one thing in common: they don't overcomplicate things. At the heart of Munger's advice lies a concept that many miss. Simplicity is not just for ease. It's for clarity, for focus, and most importantly, it's for eliminating the noise that distracts us from what truly matters. In the world of finance, the simplest solutions are often the best ones. Take a look at the concept of compound interest, a simple idea that has created some of the world's wealthiest fortunes. What's more powerful than this? The idea that small, consistent efforts over time can create extraordinary results. It's the same principle that drives long-term investing in companies with strong fundamentals, not chasing the latest speculative opportunity. But simplicity doesn't just apply to investing. It applies to wise life, to wise businesses, and even to wise our mindset. The more complex you make your life, the more distractions you face. The more distractions you face, the more you dilute your efforts and energy. Look at Munger's own life philosophy. His approach has always been about ours at focusing on the basics, learning continuously, and staying grounded in reality. He doesn't try to be a jack of all trades. Instead, he focuses on mastering a few key principles that have stood the test of time. When it comes to wealth, this simplicity is often what separates those who grow rich steadily from those who chase the latest trend without a clear purpose. In fact, Munger's legendary advice is often wrapped in the simplest of terms: spend less than you earn. Invest in businesses you understand. Be patient. All these ideas are easy to understand, but they're far from easy to follow. Most people overlook these straightforward ideas because they don't come with the allure of complexity or immediate rewards. And that, my friends, is exactly why they work. Let's talk about compounding for a moment. In today's fast-paced world, the desire for instant gratification is overwhelming. We want things quickly. We want results now. But the true power of wealth building lies in delayed gratifications, in waiting, and letting your investments grow over time. Compounding is often called the eighth wonder of the world, and for a good reason. The idea is simple: your returns earn returns, and those returns earn even more returns. The more time you give the process, the greater the rewards. Take, for example, the simple strategy of buying high-quality stocks, holding them for decades, and reinvesting the dividends. The math is staggering. Over the long run, the compound effect has transformed small investments into large fortunes. But to see this transformation, you need patience and discipline. You need to ignore the daily fluctuations in the market and focus on the long-term horizon. Munger has always emphasized the importance of having a long-term vision. It's the reason why he rarely makes quick trades or chases short-term gains. He knows that building wealth is a slow, methodical process, and yet it is this slowness that allows your investments to grow into something extraordinary. When you understand this principle, the principle of compounding, you begin to understand why simplicity and patience are at the core of true wealth. You start to realize that the quick wins people are chasing might be just distractions that keep you from focusing on the things that truly matter. This doesn't mean that every investment decision should be passive. On the contrary, Munger advocates for a focused approach. But that focus should be on quality, not quantity. Instead of trying to catch every opportunity that comes your way, concentrate on what you know best. Be selective. Take the time to understand your investments deeply. Know why they work. When you do this, you begin to see opportunities where others see risks, and you begin to make decisions that will build wealth over time. In the coming sections, we'll dive deeper into Munger's philosophy of West mental models and how thinking deeply can elevate your decision making. This is where we'll begin to understand how learning from multiple disciplines gives us a rich perspective on wealth, business, and investing. 2. Before we continue, think about this. Are you someone who gets excited by the AE's next big thing? Or do you have the discipline to sit back, wait, and focus on the S quality opportunities? This is a question that the wealthy constantly ask themselves, and it's a mindset that we can all adopt to see extraordinary returns on our investments. Think of mental models as Ayer's lens through which you see the world. They are the frameworks of understanding that help you make sense of complex situations and simplify decision making. When you understand a few key mental models, you start to notice patterns, make better decisions, and avoid costly mistakes. The power of our mental model is in its ability to bring clarity and simplicity, and it is an approach that, as wealthy individuals, use to navigate the complexity of life and investments. Munger has famously said, "To a man with a hammer, everything looks like a nailed ass." What he means by that is simple people tend to view the world through the lens of their as expertise or as experiences. But if you limit yourself to only one model or perspective, you'll often miss out on better solutions. So, Munger suggests learning many models and using them to understand a problem from different angles. This is where the truest power of contrarian thinking lies. It's not about having one right answer. It's about considering God's multiple perspectives and choosing the best one for the situation at hand. For example, when you look at an investment opportunity, you don't just think about it in terms of FASM money or air returns. You consider everything from S market trends, S company fundamentals, psychology of the market, to the close long-term vision of the business. By drawing on mental models from multiple disciplines, finance, psychology, economics, history, and more, you gain a clearer picture of how to approach any situation. 2. Let me share a story with you. Imagine you're considering two investment opportunities. One is of a hot new technology startup. Everyone's talking about it, and it promises explosive growth. The other is as long-established businesses, with a steady growth trajectory, solid fundamentals, but not much buzz in the market. The majority of people would likely jump on the tech startup. It's new, it's exciting, and it promises high returns. But what if you apply a different mental models? Let's say as regression to the mean, which tells us that extremes tend to move back toward the average over time. Looking through this lens, you may realize that as explosive growth doesn't last forever, and that the tech company's valuation might eventually return to a more rational level. The business that has been growing steadily, however, might offer more as predictability and as safety. This is where Munger's principle of avoiding risk comes in. You can still achieve his consistent returns without diving headfirst into the speculative excitement. This is one of the beauties of mental models. They give you multiple ways to view an opportunity and allow you to see beyond the hype. Now, let's talk about one key mental model that Munger frequently references. Inversion is a concept where, instead of asking, "How can I succeed?" you ask, "How can I fail?" This model forces you to consider those negative aspects of a decision, to think about the things that could go wrong, and then actively avoid those pitfalls. For instance, when evaluating a new investment, don't just ask yourself, "What could go right?" Ask, "What could go wrong? What are the risks? What could happen if the market turns against you? What are the red flags that you should be aware of?" This principle is extremely powerful because it forces you to think about worst-case scenarios and develop strategies to avoid them. When you look at a situation from a negative perspective, it often leads you to better decisions that protect your downside. And that, ultimately, is how you create wealth, by avoiding catastrophic losses rather than chasing the highest possible returns. By applying inversion, you also start to realize that it's not just about what you gain, but also what you don't lose. This is one of Munger's most consistent messages, avoid big mistakes, and you'll be far ahead of the game. In fact, he often reminds us that his preservation of capital should be the top priority. If you focus on losing less rather than making a lot, you'll have more room to grow your wealth over time. But this doesn't mean that all risks should be avoided. Munger is a firm believer in taking smart risks, those that have a clear upside and a manageable downside. And this again comes back to thinking carefully, or Sarah's evaluating thoroughly, and using mental models to arrive at the best decision. As we move forward, consider the models that you use in your own life. Do you think about problems from different angles? Do you consider the error's worst-case scenarios? Are you as clear-headed when you make decisions, or do you sometimes rush into them out of R's excitement or R's fear of missing out? I want you to think about this and really reflect on your decision-making process. 2. Imagine this: you've been offered 2 opportunities. One is in an industry you know very little about. Maybe it's tech or biotech, fields that are foreign to you. The other is in a business you've been familiar with for years, where you understand the products, the market, and the risks. Now, here's the question: which one would you invest in? Most people would say they'd opt for the hot opportunity, the one that promises ours fast growth and ours big returns. But Munger's advice has always been, stick to what you knows. That's the foundation of the R's circle of competency. The circle of competence refers to the areas of life or business where you have R's deep expertise and I's understanding. These are the things you know as well enough to make confident decisions. Your job as an investor or business person is not to chase every opportunity that comes your way. Instead, it's to focus on what you already understand and can evaluate with a high degree of certainty. Munger emphasizes that you don't need to know everything to be successful in life or in investing. What you need to know is what you don't know, and that's a key part of the circle of competence. Consider this: many people, especially when they're just starting out, want to be everywhere. They want to know everything, dabble in different industries, and follow every new trend. But that's often a recipe for failure. Munger, however, suggests that it's far more important to know your limits and to work within your circle of competence. If you try to expand your circle without truly understanding the new area you're venturing into, you're likely to make costly mistakes. Think of it this way: when Warren Buffett and Munger made their massive fortune, they did so by sticking to industries and companies they understood. They didn't try to invest in everything under the sun. They built their wealth by focusing on businesses with simple, predictable models, like insurance companies, and there's consumer goods and banks. They knew those industries inside and out, and that knowledge allowed them to avoid the unknowns that could cause significant losses. This doesn't mean you shouldn't learn new things. In fact, Munger is a lifelong learner. He encourages reading widely, expanding your mind, and learning from other disciplines. But the key is that as you gain more knowledge, you need to update your circle of competency. It's about knowing what you're good at and staying within that domain. Here's a personal reflection I want you to consider. How often do you feel compelled to invest in something you don't fully understand, simply because others are doing it? How many times have you acted out of fear of missing out or the pressure to follow trends? How many times have you ignored your gut feeling, thinking that you could learn on the fly? These are dangerous questions because they lead to decisions made in haste or out of insecurity. Investing in things outside your circle of competence is like trying to navigate a storm without a compass. You might get lucky a few times, but the odds are stacked against you in the long run. Instead of chasing the next hot trend, focus on what you already know. Don't try to be everything to everyone. If you are unfamiliar with a business or industry, that's okay. The key is to recognize that, and then pass on the opportunity, rather than getting swept up in it. When you make decisions within your circle, you're far more likely to succeed in the long run. As you think about your investments and career choices, remember that IR's great wealth doesn't come from doing everything. It comes from mastering the things that matter most to you, the things you can confidently understand and evaluate. That's the power of the circle of competence. It's about focusing on your strengths, understanding where you can add the most value, and leveraging your deep knowledge to make informed decisions. Welcome back, dear listeners. We've already touched upon some important principles from Munger's uncommon common-sense, such as simplicity and mental models and the circle of competence. Now, in this part, we're going to dive into a particularly important lesson as humility. Specifically, how to avoid the traps of ego and overconfidence that so many people fall into, especially when they start finding success. Munger often speaks about the danger of ego and how it can cloud judgment. Ego, when unchecked, can lead you to believe that you're invincible, that your success is inevitable, that you have all the answers. But in reality, the markets and life are far too complex to be controlled by one person's ego. Munger's own success comes from a deep sense of humility, an understanding that he is always learning, always growing, and never too confident to consider that he might be wrong. And it's this kind of humility that protects you from the arrogance that comes with success. I want you to think about as the biggest mistakes in your life, whether in business, investments, or personal decisions. I bet most of them can be traced back to moments when you were overconfident, or when you thought you knew better than everyone else. The truth is, overconfidence is one of the quickest ways to lose money in any investment. It's a deadly trap. Munger has often said that the most important thing is to avoid big mistakes. And the first step in avoiding those mistakes is recognizing that you are as vulnerable to failure. No matter how successful you've been, no matter how much you know, there's always a dozen's possibility of being wrong. Take the stock market, for example. How many investors have been crushed by the belief that they could predict the futures, that they could time the market perfectly? How many times have we heard stories of people who made a killing in the short term and then lost everything when the market turned against them? This happens because people get too attached to their own predictions, their own analysis. They forget that the world is uncertain. Even the smartest people in the world can get things wrong. In fact, Munger himself has talked about how he's wrong more often than he'd like to admit. It's his ability to learn from those mistakes and move forward that has led to his success. One of Munger's most important teachings is the idea of embracing mistakes. Not just acknowledging them, but learning from them. Mistakes are the greatest teachers, as long as you are humble enough to learn from them. The people who go broke or fail in business are often the ones who refuse to admit their mistakes or think they can do no wrong. But the wealthiest and most successful people in the world are often the ones who learn the most from their failures. Instead of blaming others, they reflect on their decisions and figure out where they went wrong. This desire of self-awareness and honesty are key to long-term growth and wealth accumulation. Think about it. The people who get cocky and make unrealistic assumptions are the ones who often get burned. But those who approach life with humility, understanding that there are always things to learn, are the ones who succeed. It's all about maintaining a mindset of continuous improvement. I want to share a personal story with you. Let's say you're running a business and you think your product or service is the best on the market. You've had some success and things are looking good. But then a competitor comes out with something innovative, and suddenly your sales start to decline. You resist this change because you're convinced your way is the only way. What happens? Your pridey and ego prevent you from adapting. You ignore feedback from customers, dismiss new ideas, and continue doing what's always worked in the past. But that's the moment when your downfall begins, because success, like wealth, is always changing. The market, the economy, and the world are constantly evolving. If you fail to adapt, you will be left behind. That's where humility comes in. A humble person would recognize the shift, accept that they might be wrong, and seek new solutions. They would learn from their competitors, from their customers, and from their own mistakes. In other words, humility allows for growth, while ego creates stagnation. It's also important to recognize the role of patience here. Sometimes the ego gets in the way because we want instant results. We want success to happen overnight. But that's not how wealth works. Building lasting wealth takes time. And patience is a critical part of that process. Munger has always said that you can't rush successes. It's not about making a quick buck or trying to hit it big in a short period. It's about building steady, reliable wealth over time through sound decisions. Mistake correction is consistent effort. That's why patience is not just a virtue, it's a wealth-building strategy. Dear listeners, to the next chapter in our journey of Munger's uncommon common senses. This part is perhaps the most important of all long-term thinking. In a world that thrives on instant gratification, Where everyone wants results yesterday, it can be hard to maintain a mindset that is focused on his long-term growth and as delayed rewards. But Munger's wisdom teaches us that true wealth, the kind that lasts and brings lasting peace, is built over time. It's about making decisions as today that will pay off a decades down the road. You see, most people's approach to wealth and investment is short-term focused. They chase quick profits, they hop from trend to trend, and they seek instant returns. But this leads to what I call the feast or famine cycle, periods of wild success followed by devastating losses, because the foundation wasn't built to last. Munger, however, has a completely different approach. He believes that the secret to wealth isn't found in chasing trends or taking wild risks. The secret to wealth lies in patient, deliberate, long-term decisions. Let me tell you a story. There was a man who started a small business many years ago. He was not a visionary or a risk taker. He didn't try to chase the next big thing or jump on every bandwagon. Instead, he focused on building a solid, sustainable business, one that could weather the storms and continue to grow slowly but surely. This man was Warren Buffett, and his secret to success was his long-term approach. He didn't look for quick wins. He didn't try to get rich overnight. Instead, he spent decades compounding his returns and focusing on businesses that had sustainable, competitive advantages. Munger and Buffett's strategy of buying good businesses and his holding on to them for the long run is the reason they've created massive wealth. They weren't swayed by market fads. They didn't fall for the latest get-rich-quick schemes. They focused on businesses they understood, companies that had strong fundamentals, and industries they believed would just continue to thrive long into the future. And this, my friends, is the core of Munger's philosophy. Our long-term thinking. Long-term thinking is about making investments today that will pay off over a decade or more. It's about putting your money into assets that are likely to grow in value over time, rather than trying to time the market or make short-term speculative bets here. Now, I know many of you may be thinking, but we live in a world of fast-paced change. How can we predict the future? How can we be sure that today's good investment will still be good in 10 years? That's a valid question. The world does change, and sometimes things don't go according to plan. But Munger's advice is this: is focus on what's predictable. Focus on businesses with a strong management, good products, and a clear competitive edge. These companies may face short-term volatility, but over the long run, their underlying strength will carry them forward. Look at businesses like Coca-Cola or Apple. These companies have continued to grow decade after decade because they have strong brands, loyal customers, and predictable business models. Let me pause here for a moment and ask you to reflect. How often do you make decisions with the future in mind? Do you tend to act based on immediate desires, or do you take the time to think about the long-term impact of your choices? When it comes to investing, this could be the difference between building wealth and chasing fleeting opportunities. By choosing to invest in businesses with long-term perspectives, you give yourself the best chance of building wealth that isn't just built on speculation, but on solid, dependable growth. In the next part, we'll explore the power of rational thinking and how avoiding emotional decision making can prevent us from falling into the traps that most people do. This is where Munger's focus on discipline and patience really shines through. Stay tuned, and I'll see you in part 7, where we'll tie everything together and give you ours blueprint for successes that you can apply right away. So take a moment to reflect. Are you thinking long-term, or are you still swayed by the fast-paced instant gratification culture we live in? The future is yours to create, and the decisions you make today will determine whether that future is one of lasting wealth or a fleeting success. Part 7, the power of rational thinking, the final blueprint for wealth. Welcome back, dear listeners. We have reached the final part of this journey through Munger's uncommon common senses, and it's time to tie everything together. You've already learned about the importance of his humility, his long-term thinking, and embracing mistakes. Now, let's turn our focus to our rational thinking, the ultimate tool in building lasting wealth. At the heart of Munger's advice lies one simple yet profound idea: think rationally, and avoid letting your emotions drive your decisions. In an emotion-driven world, where people react to the latest news, trends, or market fluctuations, the ability to stay rational, to maintain mental clarity in the face of chaos, is what separates the us as successful from the y'all as unsuccessful. Think about how easy it is to get swept up in the emotional swings of the markets. When stocks are soaring, everyone feels invincible. People make decisions out of greeds, believing the good times will last forever. But when the market crashes, the same people panic, sell off everything, and make decisions out of fear. They let the emotions drive their choices, and in doing so, they lose control over their financial destiny. But if you are rational, if you can stay calm and make decisions based on logic, not fear or greed, you put yourself into the driver's seat. Yes, rational thinking means looking at the facts, assessing the long-term values of an investment, and staying committed to a clear strategy. It's about knowing what you don't know and being okay with that. It's about you sticking to your principles when the world around you is changing rapidly. And it's about making decisions based on your own analysis, not the whims of the crowd. Munger often says, it's not supposed to be easy. Anyone who thinks investing is easy is fooling themselves. But that's the beauty of rational thinking. It just cuts through the noisy. While others are chasing after the latest market trend, you'll be focused on making rational, sound investments that align with your long-term goals. One of the best ways to develop rational thinking is by developing a system of mental models. These models, frameworks that help you make better decisions, can guide your thinking through the most complex situations. The more models you have at your disposal, the better you will be at navigating the twists and turns of life and investment. For example, Munger's approach is grounded in mental models from various fields, economics, psychology, physics, and more. By combining knowledge from different disciplines, he is able to view the world from a broader perspective, and in doing so, makes smarter decisions. He doesn't rely on one single piece of information. Instead, he uses a broad range of tools to evaluate any situation, to de-risk his decisions, and to make choices that have the highest probability of success. Now, let's get practical for a moment. How can you develop this kind of rational mindset? 1. Has to check your biases. One of the biggest obstacles to rational thinking is our biases, our natural tendencies to make decisions based on emotion or prejudice rather than logic. Confirmation bias, for example, is the tendency to seek out information that confirms your existing beliefs. This bias can lead to poor investments, because you'll only look for evidence that supports your view and ignore information that contradicts it. By becoming aware of these biases, you can make better decisions. 2. Adopt a long-term mindset, and as we've discussed earlier, long-term thinking is essential. Short-term thinking leads to erratic decisions based on the latest headlines or market fluctuations. Rational thinking requires patience and the ability to see beyond the immediate. 3 is learn from others. One of the smartest things you can do is learn from those who have succeeded. Munger is known for his obsession with learning. He reads extensively from a wide variety of subjects. He gathers information, analyzes it, and applies it to his own decision-making. When you take the time to learn and grow, you begin to build your own mental models, and you start to make decisions based on a much deeper understanding of the world. 4. Don't be afraid to say, I don't know nay. A rational person is humble enough to admit when they don't have all the answers. In fact, Munger often emphasizes that not knowing something is not a flaw. The flaw lies in pretending to know when you don't. The more you admit your lack of knowledge, the more you create the opportunity to always learn. This humility allows you to grow, improve, and make better decisions in the future. In summary, rational thinking isn't about being emotionless or detached. It's about being calm in the face of uncertainty and making decisions based on what you know, not what you feel. It's about seeing the world as it is, and it's about as you wish it to be. And it's about understanding your own limitations and knowing when to seek help or step back to make better choices. As we wrap up, I want you to reflect on one simple question. Are you making decisions based on emotions or logic? Are you driven by fear, greed, or the need for validations? Or are you making decisions based on his long-term vision, thus patience, and rational thought? If you can truly embrace the power of his rational thinking, along with the principles we've discussed, as humility, as long-term vision, and the ability to learn from mistakes, you will be well on your way to as lasting success and have true wealth. The road ahead may not always be easy, but as Munger wisely says, it is others. If you keep learning all the time, you have a huge advantage. Ach. And that, dear listeners, is the true essence of wealth, as the ability to grow, to learn, and to think rationally no matter the challenges you face. Thank you for being a part of this journey. We've covered a lot of ground today. Now it's time for you to apply these lessons in your life. Remember, wealth isn't just about money, it's about a mindset. Stay humble, stay rational, and never stop learning. May your financial journey be filled with clarity, patience, and wisdom. The world is yours for the taking. Go forth and create the life of abundance you deserve. A path to uncommon wealth and wisdom. As we come to the end of this journey through Munger's uncommon common sense, I want you to pause and reflect on the immense power you now possess. You've been exposed to the core principles that have shaped the thinking of one of the greatest investors of our time. These principles aren't just about wealth building in the financial sense. They're about creating as life of purpose, as resiliences, and as long-term fulfillment. I urge you to take a moment and reflect on the lessons we've discussed. 1. As humility. True wisdom starts with the understanding that you don't know everything. Every person you meet, every book you read, and every mistake you make is an opportunity to learn and grow. It is the humble mindset that will guide you to long-term success and wealth. Never be afraid to admit you don't have all the answers. 2. Long-term vision. Success isn't about chasing the next big thing or trying to outsmart the market. It's about ours building slowly and steadily. The road to financial freedom isn't paved with get-rich-quick schemes. It's built through patient, deliberate decisions that compound over time. A focus on what will last, not what's popular today. 3. As rational thinking. The foundation of Munger's philosophy is the ability to think clearly and rationally, regardless of the market's emotional swings. In an age where most people make decisions based on fear or greed, you must train yourself to think logically and make decisions grounded in facts. Understand the world as it is, not as you wish it to be, and stay disciplined in your approach. Keep a cool head when others are panicking, and a steady hand when they're riding the emotional highs of the market. 4. Learning and mental models. Every bit of wisdom you gain, every mental model you build, becomes a tool that helps you make better decisions. Let's learn constantly. Read books. Seek knowledge from a variety of disciplines. The more you know, the clearer your decision-making will become, and the more you'll see opportunities where others see challenges. Now, my friends, it's time to ask yourselves, what will you do with this knowledge? Will you let it slip away, another passing thought in a world full of distractions? Or will you embrace it, integrate it into your life, and build your wealth, not just financially, but in every area of your life? I can't promise you a quick fix or overnight success, but I can promise that if you apply these principles, if you approach life with this humility, long-term thinking, and as rationality, you will be on the path to a life of true wealth. The journey ahead will be difficult, but it will also be rewarding. You will face setbacks, mistakes, and moments of doubt. But if you stay focused on your vision, if you maintain your patience, and if you continue to learn from every experience, your life will be transformed. The world will always throw challenges in your way. It will tempt you with shortcuts, distractions, and get-rich-quick schemes. But remember, true wealth isn't built on the back of gimmicks or emotions. True wealth is built on our solid foundations, on our patience, and on our rational thinking. It's about looking at life with a mindset that transcends the immediate and focuses on the long term. So I leave you with this: go forth with clarity, and go forth with wisdom, and go forth with unwavering belief that by practicing Munger's principles, you can create a life filled with lasting wealth, not just in your bank account, but in your mind, body, and soul. The journey may be long, but the rewards are immense. You have the tools to build something extraordinary. The future is yours. Seize it,